One, zero. All right. Good evening. Good evening. This is Prince, and welcome Stan to You're Alone. So I'm only going to be presenting to you, and this session is of course being recorded. So I wanted to discuss how we can optimize our current crude oil trading strategy and the signals. And of course, as we all know, we are using 21 range chart bars in the Skype oil room, and of course the skit system, which is basically bullish EMA crossover on the 21 range chart. We had a good, like, can you see the chart and movement clearly? Damn. Okay, let me see. Can, are you sure? Can you see? All right. Can you see now? All right. So what's the price you see on my screen at the moment? All right, that's great. So we have a nice internet now because I upgraded from the crappy internet. Anyway, so if you see my mouse, this is the skit system. We have a bullish EMA cross, and I used to give signals before we enter long here. But if we have flat trend lines, sideways market, there is no use of giving any signal, because the the market should be trending, the EMA should be trending to give entries. But I wanted to simplify, make our trading easy, you know so let me take out a new chart. We're just gonna brainstorm a little bit on how we can optimize our crude oil, non-expiring crude oil. Okay, now let's pop up a fresh new crude oil chart. Crude oil 21. Here it is. Load the template. Default. Control N. All right. So basically, what I'm thinking is that we get rid of all the EMAs, like only keep one EMA, like 200 EMA. All right, and we use the 200 EMA as our support and resistance. So I've been analyzing, and like instead of trading small multiple micro lots, we take only less positions, only at buy side. So if we move to previous historical data, and here is the 200 EMA break. When it broke down, it went in favor. Before it made a test 200 EMA, it made 400 ticks. Can you see that? And since I said we can use even the EMA as our support area, not support level, support area and level both. So we can even get a W pattern here to go long again. Let me damn, because I have to bit. I don't know why the hell it went all the way back. This was the breakout. Then we had here. Can you see this? We have a W pattern here. So that's basically a simple strategy of, we can like take another long position here long term. We have a retest at 200 EMA M pattern. Above this swing level, sorry, W pattern, we would be entering long, and we can hold the trade again. Instead of 100 200 ticks, we can hold it for 200 to 400 500 ticks, because we are trading long, only one direction for bigger results. So this of course determines sideways range here, but we took a long to break out of the sideways range. So when we broke out of the sideways range, and before we made a new test, we have made 230 ticks. Can you see that? So this is what I'm thinking. And again, when we exit, we can trail our stops behind every bar, every 50 ticks, or at the test of this 200 EMA. So when we came back down again, we have another W pattern to go long. And let's see how far does this go till the retest. It goes 130 ticks. It's not bad, is it? So when we feel the market is overbought, then we can really, start short selling. We can even short sell, but I don't like short selling personally. I would hold again and probably go long again around this area. because it's a bad entry, of course. No clear, no consistency. But above 200 EMA, I would buy. But let's say if I was a loser, but we are trading without stops, I would have entered long again here. This would at least recover 50 or 40% of the floating position. That's the strategy that I'm thinking for everybody. So what do you think of this in mind, the 200 EMA strategy for everybody? Ah, you don't like to, yeah, because you like more intraday, yes? Yeah, this is not the intraday. I wanted to make an intraday, but I don't. I personally myself don't like intraday or trading with stops, you know. But yeah, if you have an existing strategy that works, then it's good. Doesn't matter. What do you think? Yeah, no need to change anything. But if you want to trade long term, or you have a separate swing, like an investment account, rather than saying a trading intraday trading account, this strategy is good for this kind of reason. So, but good thing is, I've noticed if you this is I don't trade the time charts, but this is a time chart. I've seen 15 range chart giving good signals, intraday. But if you were trading with you, if you wanted to trade with stops, then of course you would put your stops below these swing levels, yeah, at each and every break. So let's say this is another breakup, but the patterns aren't so clear. So these are your stop levels. But the trade management on time charts, that I cannot really suggest. I'm not good at or expert at it. But 200 EMA does give you good signals and good trade entries. Like each 15-minute chart on 200 EMA has given really good swings up to 150 ticks on average. 150, 150, about 100, above 100. So, yep, that's it. If you have any questions, any suggestions so we can refine it or do it better, feel free to say. Now, of course, it's my strategy. I have to do it, but I was just in a fun mood today. It's not going to be official webinar, but I'm just recording it for other members to see and post on my YouTube, you know. But of course, I give the signals in the room, and I prefer staying to the investor style and give minimum signals, because if something stupid happens or bad market happens, we can fix it. If the first we have bad floating, we first of all we are trading small size. We don't take bigger hits. So, yeah, that's it. That's all what I had in mind. And this was just a sample webinar, not so serious. you know. Well, range on crude oil. Yeah, we've had. Yeah, I'll move to the 21 range chart. Well, we've been having sideways market. The buyers and sellers actually have agreed to trade to do trade between 98.90 up to 120 level. Okay, this is just indecisiveness. The market buyers and sellers are into a fist fight. They're fighting each other to take control over the price. But since we are now at the highs, we've bounced up from the lows. The buyers seem to be taking control. The reason, if you we've got, see, is we have inclination, appreciation, higher lows. You can see that we've got higher lows, higher high. We had a spike up, higher high, but again we have failure at the high. So we've got 1, 2, 3, 4, 5, an ugly pentatop, because it's 5 times. I wouldn't say a quadruple top, it's a pentatop. And I'm assuming that the fifth time the buyers should succeed, which they are not, because we've got an M pattern here. If you see here, a short-term sell opportunity here. This one's an M pattern. Can you see that? So if a person would be short, it's up like 13 ticks, 14 ticks. With spread, it's like a 10 tick move. Intraday, it's a good intraday trade, but I don't like selling and I don't like intraday. So yep, that's it, and I'm gonna stop recording now. And I hope anybody who sees this video benefits some way. So let's hit the stop button.